You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas.
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 21st day of May, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from your desktop, point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. We also stream live during the show on Facebook, YouTube, and Twitter. The first set of instructions that I gave you, where you go to the home page, click the microphone, you only have to do that once, and that gives you one-click access to the show every day. Using that method, however, that method connects you to a chat box so that you can ask questions during the show. You can participate in the discussion. So that's the method of choice. Everything else comes second based upon your situation, your circumstances, your internet access, etc. Let's open with a word of prayer, as we do. Father, we thank you for all of your many blessings in our life, for the mercy, for the grace that you have shown us through this pandemic. As we learn to endure this new normal in our lives, God, we pray continually for the heroic doctors and nurses and all the healthcare professionals and first responders who have put their lives on the line for their neighbors. God, I pray that you give them strength and physical immunity during this time so that we can continue to push back against this virus and find out what our new normal really looks like. You are the great physician, so we pray for the healing for all the victims of COVID-19. God, you are the creator with power over your creation. So we pray for this virus to be destroyed, to be wiped from the face of the earth. Spirit of God, you are the great comforter. Please comfort our troubled souls. And God, we ask that you move in the hearts of our public officials as you instruct us in your word. We beseech you on behalf of our president, Congress, governors, mayors, local officials. We pray that you guide them with wisdom and strength and discernment. We also pray for the people in our nation and the nations of the world to be humbled and to turn to you in repentance and faith. We thank you for your mercy, for your grace. In Jesus' name we pray. Amen. Well, guys, here we are, Thursday, and what a ride it has been since the markets opened last night. We've been up, we've been down. Let's take a look at a chart. I'll show you what I mean. Let's go to our daily chart. Okay, we've been highlighting for days now. We had the beginning of the pandemic sell-off February 26th at a price. The bearish cross took place at 32.72. Market found support on March 23rd at a swing low of 21.74. Market clawed its way back to the BBC where we anticipated good resistance, which we got, sent us back to support, which sent us back to resistance, which sent us to some very meaningful support, blue and climbing. We rode the back of blue and climbing back above the BBC. Now, this green line is called the BBC, stands for Bull Bear Cross. When we cross below it, we're looking for lower prices, bearish. And when we cross above it, bullish, looking for higher prices. So once we got back above the BBC, we ran into resistance where we had highlighted it, which sent us back to the BBC where we found the support we needed, which took us to the next level of potential resistance that we highlighted right here on the show. Every one of these shows is archived on YouTube at youtube.com/CFRN. So you can scroll back to the very beginning of this and you can see how I've walked you through the daily chart each and every day, doing my very best to give you an idea of what to expect, not based on some secret pseudoscience, but simply on market structure. Once you understand how markets work, and that's what we teach, then you would be able to walk through this chart with the same ease that I do. We hit that resistance, sent us back to support. The support sent us up to what at the time was the pandemic swing high, That resistance sent us back to the BBC. We caught a bounce. We could not take out that high, so we came back to the BBC once again for support. Spent 3 sessions there, and now we're at our 4th session dealing with this overhead resistance that we first drew this little rectangle when we found resistance at this area. This was the one day that caught me a little bit unawares. But then the market did exactly what we expect. Back to support, back to resistance, back to support, and now 1, 2, 3, 4 days. The swing high of the pandemic recovery so far, 29.76 and a quarter. That was put in on Tuesday. Interestingly, the swing high price of the pandemic recovery, we actually ended that session by printing a red daily candle. We followed it up the next day with a green candle that took us right back into this resistance. And here we are today. How we close today, I think, is very important. If price trades down below blue and climbing, then we have nowhere left to go but the BBC, where we expect it to again be good support until proven otherwise. If it fails to be good support, then our next level of support is right here. If buyers come in and rally this market, take out the swing high put in on Tuesday, get us above this little rectangle, then we have an opportunity to trade up to the next level of resistance. And once we can work our way through that, then the big resistance is overhead at the price of the bearish cross, 32.72. So that's the outlook from the daily chart. Now, today is Thursday, Dr. Tom Day. He'll be joining us top of the hour. As far as I know, I haven't spoken with him today, but he's pretty punctual. We may speak with John. In the meantime, I put in a call to him and left a message reminding him that it's Dr. Tom Day. In just a moment, we'll go to Michael and get a recap of what happened in the live training room this morning. After we do that, I will certainly squeeze in all of the alerts that have gone out since we last spoke on yesterday's show. We've had Concierge Trade Alerts. We've had Logic 247 alerts. The market handed us some really terrific opportunities this morning. And for all of you that were there and took advantage of that, well, that bell's for you. All right, let me give you the numbers from around the world. These are the cash markets, the indices as they're called. We'll start here in the U.S. Currently, the Dow is down 38 points after being very much in the green. The NASDAQ is down 44. The NQ, I pointed that out this morning in the discussion group and to those in the live training room, that the NQ appeared to be leading us. So we opened the session with all of the indices bullish, poised to move higher. They did, in fact, move higher substantially. Then they hit resistance, the resistance that I gave out this morning in discussion and in the live training room. And so now we've got the NASDAQ in the red. The S&P is down 13 points. The Russell 2000 is down 1.5 points. Now, even though we're red, even though we're negative on the major indices, we don't have any movers or shakers yet. But the NQ, point-wise, still leading to the downside, about 0.5%. In the commodity basket, crude oil is up 34 cents, trading 33.83 last. That's a gain of about 1%. In the Asian markets, at the close, Nikkei posted a loss of 42 points. The Shanghai lost 15. The Hang Seng dropped 119. No movers, no shakers. And in the European markets at the close, FTSE down 51, almost 1%. DAX down 157, 1.5%. The CAC down 51, a little over 1%. That makes for a red day in Asia, a red day in the UK. So far, it has become a big red radio Thursday here in the US of A. So, Michael, if you're ready to take it over right now, you can certainly do that. And that might be the sound of Michael not quite ready yet.
That is Michael. That is Michael.
There's Michael.
Hold on. There we go. Put my name in. All right. Here's Michael. I'll grab the charts.
Okay, doke.
All right. Screen 1 and 2 clean.
Okay, I've got you locked and loaded. I'll hit mute on my end, and it's your show.
Okay. I got it. Here we go. Good afternoon, everyone. Today is the 21st day of May, 2020. If you have not taken a free trial with us, go to the home page here at CFRN.net. Scroll down where it says free 5-day trial. No credit card required. Click on that, and you'll be brought to this page, EminiTrainingschool.com. Now, you can go directly to this page if you want to. But all we ask for is your name, your email, your phone number. You can fill this in, hit the send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, we don't know you took the free trial until you click that. So we had a pretty good morning today. You see, we've been green for months. This whole COVID thing, it's just, our last down day was Valentine's Day. Knock on wood. It's not to say that I didn't stop out, because I did stop out a few times today, but we still ended up pretty good on the morning. Now, if you're going to read the spreadsheet, you're going to read all the CFTC risk disclosures down at the bottom. Today we made 2 ticks in the euro, 14 ticks in crude, 2 ticks in gold, and 12 ticks on the ES. That put us at plus 297.5 on the morning session. Today it took 9 minutes and 1 trade to get to the goal for the day. At that point, $100 a contract. I don't know why I have to yawn every time I start doing the show. At that point, we were up $100 a contract, and we took a total of 12 trades this morning. So on the month now, we're up $52.45. That's over 15 days, averaging $349 per contract per day. Reminder to everyone, tonight it's Thursday night, partners meeting, 9 p.m. And 9 p.m. And Monday we're going to be off. All right, it's a holiday on Monday. All right, so on the year now we're at $35,580. That's over 93 days, averaging $382 per contract per 2-hour day. Okay, let's get into what happened today. Now, there was a lot of movement today. You know, we had some pretty good trends going in different markets. So I'm going to back it out a little bit. So it'll be easier to go through, not so much see. All right, so we started out here at 9:30. There was a shorting opportunity right there. We had this one right here. This is on gold now, and we stopped out on the first trade on gold. Okay, and then you see there were some big runs and a lot of activity, but the slingshot wasn't giving it up. Push it out a little bit. Okay. And then it got a little bit choppy for a little while. You know, we had some news events. We had people speaking. You know, Powell's going to be speaking this afternoon in an hour and a half. We had a down close here that we missed. We picked up when we get there. 10 ticks to put us at +2. We missed that short right there, which would have been profitable. That short, which would have been profitable. That long, which would have been profitable. That short, which would have been profitable. Now, you see all these trades that I miss, it's because I'm doing something else when they come along. And that was pretty much it for the morning session. So there were about 6 trades, and we took 2 during the morning session. Now, during the break, there was a long right there that would have worked out. And that was it. Right, that was it for the gold today. We ended up with +2 on gold. Now, on the euro, we just had a couple of small trades. There were a few that set up. This one right here, which would have been profitable. That one, profitable. That one, profitable. This one, we took a tick on. This one, we took a tick on. And since then, there was one more trade right there. Actually, there were 2 more. There was one there and one there. Both had profit potential. Okay, now the crude. We do on crude. We had a few trades on crude. The crude and the ES today, we had 4 trades. Hang on, I'm scrolling back. Okay, our first trade on crude was right here, and we picked up, looks like we picked up 2 ticks on that. Then our second trade on crude, we picked up 20 ticks, so we're at +22 at that point. Third trade, we stopped out, put us at +14. Missed this trade, missed that trade, missed that trade. So there was another one right in here. And we had to break even on that trade. Okay, we missed that trade, missed that trade. And then we get into the break. And then we get into the break. During the break, there really wasn't anything. There wasn't really anything at all during the break. Now onto the ES. Scrolling back to the beginning, because we did have some trades here on the ES. Good and bad. Okay, here it is. Our first trade of the day was right here on the ES. We picked up 8 ticks profit. Our next trade on the ES, I don't see it highlighted. Well, there was a trade here. A trade here that we missed. A trade here we got to break even on. Okay, a trade here that we missed, and it's too bad we missed that one. Then this trade here, we picked up 12 ticks to put us at +20. And then we stopped out right here to put us back down to +12. Then it just got really choppy for a while. And we had a shorting opportunity right there. I'm sorry that I missed. I tried to get into it, but I missed. Another one here, another one here, another one here. All of those would have been profitable trades. Now we get into the break, and there was a nice long trade right there. That would have worked out just fine. And a short over here. That would have worked out. That was during the break. Now, that was the morning session, so there was a ton of opportunity today. A ton of opportunity. But I would just go back to the spreadsheet and say today is the 21st day of May, 2020. We made 2 ticks on the euro, 14 ticks in crude, 2 ticks in gold, and 12 ticks on the ES. Put us at +297.5 on the morning session. Today it took 9 minutes and 1 trade to get to the goal for the day. So how many times is that this month? 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 out of 15 days we cut it on the first trade. And these other days, like yesterday, took 4 trades, but there was a trade that set up that I didn't get. That would have been the first trade. And so anyway, the opportunity is there. I just want all you guys to realize that these are unprecedented times. I've never gone this long all in green. You see that? How many consecutive days is that? Well, it's half of this month, right? There are 18 trading days in this month. 1, 2, 3, 4, 5, 6, 7, 8, 9. So half of that month. And 22 days there. 21 days there. So we'll say 30, 40, 52. I'm not going to win again. 52, 67 days in a row right now. Okay. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 21st day of May. Made 2 there on the euro, 14 on crude, 2 on gold, and 12 on the ES. Put us at plus 297. And took 9 minutes in 1 trade to get to the goal for the day. At that point, we're up $100 contract, to a total of 12 trades. So on the month now, we're at 52.45. That's over 15 days, averaging 349.67 per contract per 2-hour day. On the year, we're at 35,580. That's over 93 days, averaging $382 per contract per 2-hour day. Okay. Now to get into the next, not to get to take the free trial, go to the home page at CFRN.net. And right here it says free 5-day trial. Click on that. It's going to bring you to this page, eminitrainingschool.com. You can go directly there if you want to. On this page, all we ask for is your name, your email, and your phone number. And you can fill this out, tell us your biggest trading challenge, so we can tailor one-on-one training just for you. Hit the send button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial, so you got to do that. All right. All right. And with that, I can pass it back out. Fabulous. Phoenix, Arizona. Dwayne, sitting in Studio A, overlooking South Mountain, America's largest city park. You got it, Dwayne.
Okay, thanks very much. Recap of the recap.
Today, it took 9 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 per contract.
That's a good job. Good job.
It's pretty consistent.
Okay, guys, I'm going to start you out with a recap of Logic 247. Okay. Yesterday at this time, when we did the recap, in Logic 247, we had 36 alerts total. 6 never triggered. We were waiting on the disposition of 3. We had 27 actionable alerts. 3 had stopped out. So at this time yesterday, 11% of the actionable alerts were stopped out. Today, and that's John, so let me just finish this real quick. Today, as of 12:30 Eastern, 1 day later, we now have 58 alerts. 7 never triggered, waiting on 4, 47 actionable alerts, 6 have been stopped out, so that's 13% of actionable alerts stopped out. This is a good number. We average about 20% being stopped out on Logic 247 each week. After we talk to John and Dr. Tom, I'm going to do a complete recap of all the alerts. We had some really nice opportunities this morning. I'll just show you one real quick, and then we open John's mic. 2964. I told the guys to look for resistance around 2970. We actually made it up to 2972. I'll go into detail. I'll give you all the exact numbers, everything you need. Just want to point that out for you. So there's some good stuff to come in the show. Let's go to John right now. John, if you're there, welcome to the show. Let me get his mic open. All right, John, you got an open mic. Welcome to the show.
Hi there. Well, a couple of things that we mentioned yesterday are doing okay today. Facebook made a new all-time high, which we predicted yesterday. It's up pretty substantially. The market, obviously our employment deal didn't quite work out, but I think maybe next time it might go positive. So the market is down a little bit, but the mid cap and the one company are all higher today, which is actually quite a good thing.
There's Facebook. Let me put it on the daily chart. There we go.
Yeah, it's on a doji, so I think the fact that it's not kind of following through, at least today, is causing the sector to underperform, and the tech sector underperforming is never a good thing. So the airlines are doing better today. If you want to take a look at United, UAL, it actually looks pretty bullish. It looks like we're coming off the lows. We're starting to creep higher, but I think you could potentially accelerate next week higher.
Yeah, $40 is going to be an obstacle to overcome, but if we can clear $40, then there's not a lot of resistance between 40 and 50.
Right. Well, it's a good trade. There's a decent trade there. In fact, all of these, you got that kind of double doji down the bottom, kind of an island bottom, and it's going the right way at the moment. And on the weekly, it's a big weekly reversal.
Weekly.
I mean, it's quite a strong. Now, the last time we had the previous weekly reversals didn't go anywhere, but this one, you would think it has the potential to at least go back up to the 30 area. It's about 30 to 35 perhaps.
Right.
Possibly even 40. So there's a pretty good percentage gain there.
And then we get over 40, we leapfrog right up to 50.
Exactly. And it's sort of a building blocks. We're potentially putting in the building blocks for a rally here. Boeing is doing better today, as we expected. It was up very substantially earlier on. We actually got out near the highs, but it looks like it's a potential rebuy somewhere in this dip right now.
Okay, this is the daily chart.
Not a great looking weekly chart. I mean, look,
this
there's
is
no
daily here.
Sorry.
I switched it back to the daily.
Okay. Sorry. The daily, it needs to go higher today. If it doesn't go higher, I'd be a little bit worried. We could be in for another test down the end of the week.
Major obstacles around 160, and then again about 185, 190.
Yeah.
I mean, it could. This thing could just sprint to 225.
Yeah. The fact that it's had such a good start today with a gap. And look at the doji. What did we say yesterday? Take a shot on the doji, and it worked out just fine. So it's trying to make up its mind whether if there's a late rally in buying today, I'd be really, really impressed. Frankly, I'd probably want to stay long, or go back long rather the stock. So
if we had drawn that trend line a couple days ago, we could say that we have now broken this trend line, and are on the north side of it. But if we look left, we can see we have obstacles here, here, here. So it'll be a stair-step pattern on the way up. But a lot of it's going to depend. When we're talking stocks, guys, we have to, of course, you can just purely trade stocks, technical, with no thought of fundamentals. But when you get into something as big as the airlines and this pandemic that we've had, and all of a sudden LAX in the middle of the daytime, their international terminal is like vacant. I mean, that's huge. And so even for a purely technical trader, it's hard not to let that kind of fundamental infect their thinking.
Could you put up SPLK?
Sure. Okay. Splunk. I've heard of this. What do they do?
I don't know, but it's going up today. It's doing pretty well.
Okay.
So,
Spelunking, that's mountain climbing, right? Or is that spelunking or is that climbing the walls in a cave? It's a thing. I don't think it has anything to do with this, but that's what it made me think of.
yeah, the market's not acting good today. It's starting to go, it's threatening to go negative now. This is really...
Well, John, we caught the move up live this morning with the alerts. We caught the move down. Okay. But we've got this is our highest weekly trading zone up here on the S&P. Now, we tried back on the 19th to reach it, and we came up a little shy. We tried again on the 20th to reach it. We came up a little bit shy. And now, here we've come up again on the 21st, and what we have is a series of lower highs. Okay. So that definitely shows some weakness in the market. Price has gotten below the BBC. And so we went from pre-market, I was sending out alerts to trade this thing long, which worked out well. We ran into the resistance we anticipated. And we've also alerted on the short side. We've got some alerts out right now on the short side for the indices because they all look like they're coming a bit undone. The only big economic report we had this morning were new home sales, which came in, well, first we had the jobs, which came in pretty much with it, along with expectations. I think the housing number, it wasn't bad at 10 a.m. Eastern, because after 10 a.m. Eastern, the markets did, this is the 10 a.m. candle. Well, this is the 9:30 candle. At 10 o'clock, the news came out. And you know what? Let's take a look at that housing number, because we spoke about it and glanced at it, but let's just see. Now, this afternoon, Jerome Powell is speaking, but I think it's just like a convention or something. There's a couple of other Fed people speaking as well, but at 2:30, Powell's going to take the mic. I don't know that he'll say anything that will move the markets, but at least be aware that he is speaking right here. Powell speaks at 2:30. This morning at 10, high impact, existing home sales. The forecast was 4.30. We got 4.33, so that's a better than expected number. Yet it sent the markets. Now, some will say it sent the markets lower. You say, well, how can good news send the market lower? I'm not going to say that this better than expected number sent the market lower. All I can say is that once this news came out, the markets did, in fact, trade lower. Are the two related? I'm not psychic. Perhaps psychotic, but not psychic. So, John, go ahead. I'm going to put you on hold. I got to hit mute for 1 second, but you keep going, okay?
Okay, we just had a little bit of a sort of shakeout here, and it's actually turning around. And it might be the lows might be in actually here. This was just a sort of a little bit of a shakedown, and it's sort of stabilizing now. And some of the stocks that just pulled back are actually looking pretty strong, like United. Looks like it can go higher again. Boeing just dropped down a bit, but I think it's looking actually better now. If it can get back over 140, I think it'll look pretty strong for a continuation. And the VIX is starting to come off a bit too. Crude is continuing to act really, really well. We actually thought the gold would come back yesterday. I think I mentioned it. You could see the gold stocks were we're sort of rolling over a bit, and they foretold of a pullback. So, we're sort of back in the low quadrant of the 1700 again, around 1724. It's actually
By the way, I'm back with you now. Okay, so I can put up any charts that you want. John?
we ran pretty quickly up to 18 on the silver.
Your audio
we
trailed
fell back
off
a
there
bit.
for just a second. Sounds like you're back.
Yeah, I'm back.
Okay,
Can
good.
you hear me?
Okay.
Yep.
Was there another chart you
So-
wanted me to stick up?
Why don't you look at the gold for a minute?
Sure.
See how it goes.
Took a little hit this morning. Early gold.
Yeah, I thought it was going to happen. In fact, I think we referred to that doji type of thing yesterday. Actually, this gold, that would be a little bit. I wouldn't be. Probably want to be short rather than long. And that was our thought yesterday. The gold stocks are actually recovering, which is always something to be aware of. If you
Junior,
put up Royal
seniors,
Gold,
everybody?
yeah.
Are you talking junior miners, senior miners, everybody?
Well, the seniors. If you look at Royal Gold, RGLD.
Yeah, we haven't looked at that in a while, have we?
Yeah.
There we go.
Okay. See, you had the pullback, but
What
down
a
to
strong,
130. But
what a strong run that was. Wow.
Yeah, it's still strong. I mean, look at that doji, the way we've kind of bounced right back up. Now, that could mean that we've just had a bit of a pullback in the metals and we're going to go higher again in the next few days. So
We came up to that
like I say,
previous historic high.
yeah.
We double topped there, so now we got like a triple top on the daily on Royal
Yeah.
Gold at basically 140.
Yeah. So, I think if Royal Gold breaks out above 140, it's going to run a lot higher. So, I remember when this thing was at $24 a few years ago, and it certainly had a tremendous performance since. I think this shakeout we just had in the market is actually sort of setting it up for a good rally now. Maybe with a bit of luck we might go positive before the end of the day, possibly with the Fed. We're already positive on the Dow and stuff, but on the Nasdaq, we're starting to cut the losses a little bit here. So and it's potentially quite a dynamic. We could have a dynamic sort of stage rally here. So have a look at TTD.
TTD. Okay.
Yeah, it's probably getting ready for another run. TTD after a bit of a pullback. I think it just hit an all-time record high. So, a bit of a pullback like this is a pretty good place to consider re-entry point. N phase, ENPH.
Okay.
Yeah, I mean, it was a little bit of a surprising pullback, actually, considering how strong the stock was. So
we got a lag and a retracement, a lag, a retracement, a lag, a retracement.
But again, it's probably a good buy, probably a good buy run right about here.
Yeah. Actually, I would let the daily candle go green, and I would be interested in an entry maybe just north of $64, with my sights set on about 68.
Mm-hmm. Well, you had some see this previous just late April. You see had a kind of a downer, and then it popped higher.
Mm-hmm.
So I think this stock's got recovery power, unexpected recovery power. Also, have a look at let's look at the healthcare stocks, the INO.
Okay.
A red candle day is a pretty good reason to get out of a stock. like yesterday, and
parts of a healthy market there are days to pull back. So it really depends on what your long-term objective
actually
is.
we're getting a little bit of I think INO just went to a buy right here. Actually, this is not a recommendation because. Yeah, you see, it's just sort of putting in a little bit of a doji there.
If we can get back above that trend line I drew.
Yeah. This would be a nice point for it to actually reverse upwards, because it would potentially set the stock up for a very strong run from here. But listen, this is a very tricky stock. I caution anybody who's playing around in it, okay? Because mRNA, look at that. Yeah, I mean, that's had a very dramatic pullback. And I would probably be a buyer on a break back up above 68 on that stock right now.
Okay.
And but the other one that's going well today is VBIV. It's not. I don't think it's through going up yet.
Now, all of these ones that we're looking at in the health field, these are all ones that have some type of clinical trials ongoing, or. Yeah,
they're all related. There was a fella. One of the reasons why INO got hit is there was a guy who came on last night on this fast money, and I just happened to catch him. And he was bad-mouthing the stock, which I think was uncalled for, to be honest with you. But that's probably the reason why it's
money the other day, last week. I forgot to mention it to you. Nancy Pelosi, of all people.
Oh, really?
I was surprised. She only stayed, 5-10 minutes. They were softball questions, but he tried to make them, sound like a hard ball. But yeah.
Well, she's probably a pretty shrewd stock trader. I think she's made a lot of money out of the market. So.
Well, I mean, come on. When you have the power to award contracts to companies and stuff, it's kind of hard. It's kind of hard not to make money. I mean.
Yeah. I'm sure she got some easy money along the way. That's for sure. Anyway.
Has there ever been a congressman that left office broke? I mean, I'm sure there has been. More often than not, I think they leave financially a lot better off than what their salary would suggest. And I think in many cases, perhaps they didn't even do anything illegal. Just sometimes good things happen to good people. And yes, I'm talking about the government, so I know that sounds like an oxymoron, but anyway.
So, the market's feeling a little bit better right now, and the mid-cap just went to a new high. By the way, the mid-caps and the Russell are doing real well. You remember we called these things literally down at 10.50 or so a few days ago, and they've had a really dramatic rebound, which I think is a very, very good sign. And they certainly look like they want to go higher. So
they did catch a little rally on the S&P, John, but unfortunately we're running right into the area where we anticipate good resistance. Not that we can't overcome it, we can, but it'll be a chore. And I think we're going to get another leg to the downside that potentially takes us back to challenge the low of the session. And then our next weekly trading zone below, that thing's all the way down at 28.98/99. So could we see that by tomorrow? If we can take out Tuesday's low, the answer is yes. So.
Yeah, I think if we can get back, if we close up, higher than where we are right now, this afternoon, I actually think we're going to go back up and test the highs.
If we can get above red and falling, then absolutely, I'm with you long, up to test these highs. Yeah. If we fail right here, then another leg to the downside to test this low, and then this low, then this low, and then the zone below us.
Yeah. Okie doke. Well, listen, have a great afternoon.
John,
and
thank you
thanks.
so much. Appreciate you very much. And I'll tell Dr. Tom you said hi.
Okay, thank you.
All right, have a good day. Okay, guys, back to the S&P. Now, Dr. Tom's pretty prompt, top of the hour, so I'll try to move pretty quickly here. Now, I've already given you a recap of Logic 247. When you're on the trial, you have the opportunity, you see these come out live in real time as they're published to our members, they're published to the trial members, and you also have the ability to scroll up through past weeks and go to the charts and see how each and every one of these alerts unfolded. We're in week 94 of Logic 247. We're in about year 6 or 7, probably 7, of the Concierge Trade Alerts. Now, the Concierge Alerts, I'm going to drag up to the screen. Every day I give away a screenshot of those for those who come to the show. And you might say, well, gosh, does that have any value? Session's half over. You better believe it does. These alerts, based on historical price action, have a tendency to trigger multiple times per session. They trigger multiple times more often than they don't. It's a static report, but once I issue it shortly after the Globex open each evening, then those numbers are carved in stone until the next report comes out. Just as the weekly trading zones, once I publish those Monday morning at 6:15 a.m. Eastern, they are carved in stone for the entire week. We don't massage them, manipulate them, any of that. Okay? All right, so I trust you have your screenshot. Make things easier to see. I'll move the indicators out of the way for a moment. Okay, so they got out at 7 o'clock Eastern. That'll be the 1900 candle. So that's that guy right there. You know, I think instead of an arrow, because sometimes I'm like, why'd I put that arrow there? I'm going to draw a little circle around it. That was the candle. It was at 5 minutes after the beginning of this candle that the alerts came out. And the first alert, it said to consider being short 29.45. 29.45. Right there. 29.45. So. And you can see what I mean about being triggered multiple times. Okay, that's just a daily phenomenon. All right, so in our first trigger, we dropped to 29.42.75, so it's a couple points. And then on the next trigger, we dropped to 29.41.50. So that's what, 3.5 points. And on this little trigger here, we only dropped 1.5 points. And on this trigger, we dropped to 29.33. So 45 minus 33, I guess that's about 12 points at $50 a point at $600 per contract traded. The long side for the Concierge Trade Alerts, 29.84. So we never triggered long side on Concierge, but we did on Logic. And when I go through the Logic alerts, I'll show those to you. On the Dow, last night's alert was to be long 24,650. Swing high was 660. On the short side, 24,295. And we never reached it. The swing low was 24,300. So there was no trigger on the short side. On the Russell, the long side was 13.57. Haven't got there yet. Short side was 13.25. Haven't got there yet. However, on each one of these, there are logic alerts to support each one of those moves, and we'll take a look at those as we progress in the show. So we've covered the S&P, the Dow, the Russell. Let's go grab the NQ. Okay. NQ, the alert was to be long 95.15. The swing high was 95.1075, so no trigger. And the short side for the NQ was 93.73. And that happened down here. 93.73. So from 93.73 we dropped to a low of 93.55. So it's about 18 points, $50 a point. It's almost $1,000 per contract traded. So no trigger long, one trigger so far short. However, we may see another trigger coming our way here if the market continues this decline. Next, crude oil. Last night's alert on crude was to be long 33.90, which took place up here. Right there, 33.90. Come on, chart. There we go. Hey, that's better. All right. It was again 33.90. All right, so this first run up took us to a swing high of 43. So that's 50 cents. That's $500 per contract traded. Then price got back below the trigger. Important prices, important areas, almost always tested. And so from 33.90 we made it up to well, 34.50 would be a 60-cent move, so it was a $580 per contract move. And then we came back to the trigger. The swing low was 33.95. So it came this close to dipping below the trigger. Once you've been with us for a while and you understand how the market works, you understand how to read our indicators, even though you didn't dip below the trigger here, certainly you may have taken advantage of this opportunity. And as you and I get together in one-on-one mentoring sessions, we'll talk more about those kinds of things. Now the short side for crude, 32.60. We haven't hit it yet. Now, this is where I should pause and show you where we're at with crude on the daily chart. Hey, would that be my friend Dr. Tom?
I think it is. Let me check my ID here.
Dr. Tom. How are you, my friend?
Driver's license says Dr. Tom, so
right.
It is me.
So,
Go ahead with what you're doing. Oh, I'm doing good. How about you?
I'm doing good. Doing good. Do you have a slideshow today?
I do, and it's very depressing.
Oh my. Now guys, we've still got gold to look at, and we've still got the Concierge Trade Alert, or the Concierge Trade Alerts to look at. So after we finish talking with Dr. Tom today, I will complete the recap. As we do every day, everything we do, we're very transparent. So the good day, the bad day, the ugly day, we come on the show and I'll walk you through every one of them. Okay? So what you can do,
It's nice that you do that.
is you can scroll back a week, you can scroll back a month, you can scroll back a year, pick some shows at random. And you don't have to watch the whole 2-hour show. Unless it's a Thursday, then of course you would want to listen to the whole show. And then you just fast forward up to where you see me dragging this up to the screen. You know you've hit the spot where I'm doing the alert recaps, and you can just zero in on that. And I usually spend somewhere between 15 and 30, some days 45 minutes, recapping all the alerts that have taken place since the last daily show, the day before. So, Doctor, let me pass over the screens.
Well, before you do that, would
Yes,
you
sir.
mind doing the gold first? Because I'd be interested in
No, I'd
seeing.
be happy to. I'd be very happy to. Now, last night's alert for gold. Now, we've had logic alerts, but this is the concierge alert. And the concierge alert, we want it to be short, 1741. 1741 is going to be right about here. 1741. Okay. Now the alerts came out at 7:05 p.m. Eastern. So that's going to be the 1900 candle. All right, so it was this candle right here. This is when the alerts came out. Okay, and then our first trigger was right here, and we hit a low of 1739. So from 41 to 39, that's $200 per contract traded. We got back above the trigger because important prices, important areas are almost always tested. We triggered a second time, and we went from 1741 to a swing low of 1731. That's a $10 move. When gold moves $1, it pays $100. When crude moves $1, it pays $1,000. So this is a one.
You have both on the screen right now, right?
I'm sorry?
You have both crude and gold on the screen?
No, this is just gold.
Because it says up at the top.
Oh yeah,
crude.
that's just a template. Yeah, don't worry about that. No, this chart is gold. That's just a crude template.
I was wondering if maybe the green was one. And
no, I should fix that. I don't want to. Yeah, I'm glad you mentioned that. I've been meaning to fix that. Okay. So we have $1,000 move per contract. If you've earned the right to trade 10 contracts, and you guys know our rules about earning the right. You didn't earn it in a different business. I'm talking about using our methodology, our strategy. You earned the right to go live. You earned the right to trade 1 contract. You earned the right to trade 2. After the first contract, every contract you add is added with profit you earn in the market. And guess what? If you don't have profit to add the second contract, you shouldn't be adding the second contract. You should be in a one-on-one mentoring session with me or Michael or both of us so that we can help you figure out what happened. So we get back above the trigger, and this is the one I really set guys up for this morning that were with me in the discussion group and in the little meeting before the market. Okay, this moved down. We were stalking this. We were waiting for this. We had logic alerts. But on the concierge, we went from 1741. The target I gave the guys in the discussion was 1724. So, without having to tax my brain, I'll go 74 minus 20. No, I'll go, how about I go 41? 41 minus 24. That's a $1,700 per contract move just to this weekly zone. As you can see, it made it all the way down to 1715. So the actual move went from 1741 down to 1715. Now 1741 minus 1715 is $2,600 per contract traded. If you've earned the right to trade 10 contracts, you're looking at a $26,000 move. If you earned money in some other industry and you've got a fat trading account, but you didn't earn that money as a trader, you got to go through the steps. Give me 10 days in SIM back to back where you're consistently profitable. My blueprint will give you the green light to go live with 1. Increase your account balance by $2,000 with that 1 contract. And then my blueprint will give you the green light to add a second contract. And the beautiful thing about that second contract, that's the first real sign that you are building a profitable trading business, because that first contract was underwritten with, your savings, money from under the mattress, wherever you get your money. But contract number 2, and every contract that follows that you add, always add with profit, and you'll continue to grow a profitable trading business. Now, you're going to hit rough spots. They're going to be rough patches. That's why we're here. That's why we provide around-the-clock support. That's why we offer unlimited one-on-one mentoring, because getting stopped out is as much a part of trading as breathing is a part of life. But what hurts traders is when they get stopped out and they don't understand why. Well, I did this and this lined up with that and that was supposed to happen, but it didn't. Okay. When you have 2 days back to back that you don't reach your goal, you jump back into the sim. That's not a walk of shame. It's a smart business decision, because you're building a profitable business. You just hit a rough patch. You step back into sim, you book a one-on-one session with me. I'll go through every one of the trades you took. We'll dissect it. We'll diagram it. I'll make sure you understand what happened. Because when you have a trade that's not profitable, that's just the truth about trading. That's going to happen. But as long as you understand why, maybe it's something you did, maybe you overlooked something, possibly you did nothing wrong at all. Possibly the market just out of the blue reversed course for no reason whatsoever. Well, that's also the truth about trading. So when you are stopped out and understand why you were stopped out, it's not nearly as painful. It's not as demoralizing, okay? You begin to understand that it is a business based on probabilities. And I promise you, the minute you try to make it about anything more than a probability, you might as well just hang up your mouse and go home. So, all right, Dr. Tom, you've got my full attention. I've now done goal.
All right, thank you. I appreciate it. So somebody earned the right to trade 10 contracts. That's like getting a black belt, right?
That's like a red belt.
A red belt.
That's higher than
Is
a black
that the
belt,
highest?
I think. Yeah, I think so.
Oh, okay. Right.
And
That's
you know what?
pretty
And no
good.
one should ever feel obligated to trade 10 contracts. But the blueprint, it lays out the manner, the method, everything. If you get to 3 contracts, or let's say you get to 5 contracts, well, that's, if you're just looking to take 2 points a day out of the S&P, okay, well, 5 contracts, that's $500 a day. That's 250. I'm sorry.
This may be a dumb question, but what does it cost to trade 10 contracts?
Well, the margins are increased right now. In fact, I think I have, just to give you a rough idea, I think I got it right here. Now, different brokers will have different margins. Of course, the exchanges set some certain levels, but some brokers cut your breaks. Right now on the E-minis, S&P, it's $1,000 up to 5 contracts. From 6 to 10, it's $2,500 per contract. Now, we've all become somewhat spoiled over the past few years being able to trade intraday, $500 margin per contract. The NQ, because it's a little more volatile than the other indices, 1 to 5 contracts cost you $1,250 margin. Now, you have to look at this as a deposit. When you trade stocks, okay, if you go long a stock, you own the underlying equity. With futures, think of it more as you're just putting up a deposit. It's like you go to the grocery store to rent one of those rug shampooers. It might only cost $20 to rent the shampooer for the day, but you got to give them like $200 as a deposit in case you break their machine. So
Right.
this amount of margin that you're putting up, you're going to get that back minus whatever you lost on the trade or plus whatever you made on the trade. So it's $1,250 on the NQ, the Dow's 1,000, the Russell's 1,000, and the more contracts you trade, the higher risk you represent to the brokerage firm. And so you can see trading large contract numbers now takes a pretty sizable account. But once things get back to the new normal, whatever that is, you can trade 10 S&P contracts intraday for $5,000. And that's where so many traders make the mistake, because they've got $5,000, they think they're qualified to trade 10 contracts. And nothing could be further from the truth. That's the fastest way I know of to separate yourself from $5,000. Is to just...
That's like saying, I still have checks in the checkbook, so I must have money.
Something like that, yeah. Exactly.
So is this the intraday, or is this the long-term hold?
This is just the margins that they're charging now. Now, if you hold a contract from the day session into the Globex session, then they will go up. The margins will be higher than this. If you initiate during the daytime, or if you initiate during the Globex session, these are your margins. But if you hold an order open, like you go long the S&P today, and then tonight at 5 p.m. Eastern when the markets close, if you're not flat when the market reopens at 6 p.m. Eastern, you're going to be subjected to something more like this. So
whoa,
everyone should check with their broker. If we look at the treasuries, 50% initial margin up to 20 contracts. Metals, gold and silver, 50% initial margin up to 20 contracts. Any customer with 20 plus, all contracts will be margined at 100%.
whoa.
There's grains. There's the DAX is like, the margin on the DAX is like 30 grand, so we don't ever mess with that anyway. But each broker will have some different little rules, and some may have gone back to that $500 intraday. I can't say. But if Bert is not your broker, check with your broker. And if you're in need of a broker, you can call Bert. He works for Daniels Trading. His number is 866-928-3310. Now, should you open an account with Daniels, just to clear the air, Michael and I don't get a finder's fee. And if you start trading with them, we don't get a split of the commissions. Not that that would be illegal, but it would muddy the water a bit. Michael and I decided that we wanted to find the best broker in the business, which we found in Bert, and that we wanted to be able to recommend someone. We never dreamed that we would find someone as thoughtful, as kind, as caring, as diligent as he is. I mean, what a gift. I can honestly say that I don't believe CFRN would be what it is today without Bert. Bert's not a part of CFRN. He works for a different company. He works for the brokerage firm. But the individualized, personalized care that he gives our students, our clients, I've never seen it. I've had a lot of brokers in my day. But most brokers, if you call the office, you might get to speak to their administrative assistant who's probably never placed a trade in their life. Whereas if you call and talk to Bert at 866-928-3310, most times he'll answer the phone himself. Not only will he talk to you, he'll log in and look at the charts with you. When he trades, he uses our methodology, our strategy, our indicators. So if you call in with a question, you're actually talking to somebody who truly speaks the same language. And again, we don't get paid a finder's fee. We don't get a split of the commissions. We just get to tell you that we know the best broker in the business, and he'll take good care of you. So if you need a broker, give him a call.
I was talking to a client yesterday. I asked him what he did for a living. He says, well, I do real estate. I'm becoming a futures trader. I said, you make any money yet? He says, well, no. I said, all right, well, call my friend Dwayne. Because every time I come on the show, I watch what you're doing. I try to get on a little early so I can get a little free learning, and don't tell anybody. But
Brother, I'm happy to help you anytime I can.
I recommend you to several people.
Well, thank you. I appreciate that very much.
You're welcome.
So are you ready for the charts of the screen?
Yes, I am.
Okay. I shall hook you up. Make presenter. Yes. All you got to do is accept.
Okay. So, let me go full screen here.
I'm not feeling you yet.
Oh, I had to say okay. That's interesting. Never had to do that before. All right, screen sharing is paused. I'm live now.
I don't see your screen yet. You want me to go through the process again? Take it back and pass it over again.
It's saying screen sharing is paused. Please move this window. The only window that's there is the
Okay, let me do this.
go to webinar panel.
Look for a drop-down menu.
Here we go. Now we'll get some instruction.
Okay. Okay, we're looking for a drop-down menu where? I already clicked to accept, and I told it
Okay,
PowerPoint.
I took the charts back, so now I'm going to send them to you again.
So you're an Indian
New
girl.
presenter. Yes. Okay, so now you should
Okay.
get that request. Do you want to share your screen again?
Share my screen drop down, and then I'm clicking the PowerPoint.
Are you using multiple screens or one screen? Or?
No, just one screen.
Huh.
Let me go full screen.
Yep, I see something now. I see
Okay.
is a depression. You know what the
Yeah,
difference
for some
is?
reason.
You know what the difference is between a recession and a depression?
I do, yeah.
Yeah, a recession is when you lose your job. A depression is when I lose my job.
Right. Okay. Actually, that's the first thing that came up when I looked for definition of a recession.
Was it really?
Yeah. Recession is when my neighbor loses his job, and a depression is when I lose my job. Okay. So screen sharing is not
So
paused anymore.
I could see your screen for a moment and then it went away. Oh, here we go. Full screen. Is a depression in our future with moving clouds in the background.
Yes. Took me a while to figure out how to do that, but I thought it was kind of a nice touch.
That's kind of nice.
The dark storm clouds are gathering. I experienced a very unusual event. I actually agree with Nancy Pelosi on something.
Wow.
For the first time in my life. Probably never happen again. But she said we could have a depression. In the last 3 weeks, more than 60 million Americans applied for unemployment benefits. So she's talking about all the people that are employed. And
She sure hasn't missed a paycheck, has she?
no, I was just talking to somebody about that. It's like they're all telling us, well, everybody has to sacrifice, but except for the president, who doesn't take a salary anyway, he gives it to charity.
Yeah, he works for free. Right.
Have you ever seen any of these politicians that are telling us how much we have to sacrifice that are making any sacrifice themselves?
Nope.
No. They're still living in their multi-million-dollar mansions and so on. So she said it's unclear when the U.S. economy can reopen. We could have a depression because so many people are out of work. So is that true? Is it possible that you'd be right? Could the dark clouds of another depression be gathering right now? Well, obviously she could be right. I mean, we've
It's
had
a
a
long
depression
shot,
before.
but I mean, yeah, she could be, right.
Yeah, we've had a depression before, and if the same things that caused the first depression is up to today, we could have another depression. But then on the other hand, I've never known Nancy Pelosi to be right on anything, at least on political and policy matters.
Right.
But she may have something here.
Apparently she's good at picking ice cream or something, but other than that,
Yeah.
I don't know
Well-
what that whole ice cream thing was even about. But
Well, it's just, she's showing off her $30,000 refrigerator when she's telling everybody they had to sacrifice. So here's some headlines in legitimate news media. This is Kevin Hassett. He was Trump's chairman of his Council of Economic Advisors. He's no longer in that position, but he's back in the White House. He's saying in this quarter, the one we're in right now, that is in June, we're going to have the worst GDP since the Great Depression. For second quarter GDP, is going to be the biggest negative number we've ever seen.
Well, I mean, since we shut the economy down, that kind of makes sense, right?
Yeah, it's going to happen. The Fed chairman crushed the stock market at one point when he said this. It's going to be a prolonged recession. It means that this massive policy response, what they call QE, used to be QE 1, 2, 3. Now it's just QE infinity. It's just a continuing quantitative easing. Will not be the final chapter. So that discouraged the stock market and it dropped on that news. Another article, echoes of the Great Depression. U.S. economy could post biggest contraction ever. Well, that's not good. It's a definite now. Powell again, biggest economic shock in living memory. He said that we would have a slow recovery and suggested that a full rebound from the government lockdown could take until the end of 2021. And I actually think that's optimistic. I mean, the Treasury Secretary, I think I have that on another slide, he's saying that the unemployment is going to hit 50% before it starts getting better. You don't recover from that in a year. The worst economy in a decade, what's next? Worst in our lifetime? An unemployment rate of 23%, forget it. The real jobless picture is coming together. It's actually about 32%. Economists say that you should take whatever the government publishes and multiply it by times 2.1, and that's in normal times. Obviously, these are not normal times, but
why do economists say that?
Well,
is it because of just that it's hard to track, or is it intentional deception?
Oh, it's definitely deception. I mean, if I know it, they know it. I mean, if I can Google it, they can Google it. It's real simple. They underplay the inflation rate. It's usually they're saying it's 2 to 3%. It averages 5%. Unemployment, they always downplay it. Basically, they're trying to make the government look good, like act like they know what they're doing, which would be nice if they did. But if you want to know the truth, you never go to two kinds of economists. One's a government economist because they're paid to lie, and the other's a university economist because they get grants from the government. So if they come up with research or findings that the government doesn't like, suddenly their grants dry up. So you go to an independent economist. I've mentioned shadowstats.com before, John Williams. I hold him in the same esteem that you hold Bert. I mean, this guy is a straight shooter. He doesn't get paid to lie. I mean, he just gives the real numbers, including numbers that the government's trying to hide, like the money supply number. People used to talk about that all the time, the M3. And
they don't even publish that anymore, do they?
No, they don't. And the government's excuse for that is, well, it's too complicated. People couldn't understand it. Well, what's to understand? It's how much money they printed. But they don't want to see that on a chart going straight up, right? So they stopped publishing it. And they said it's too volatile to list. Well, if that's really the problem, have they never heard of a moving average? Come on. So what Shadow Stats does is Shadow Stats, S-T-A-T-S, as in statistics. He extrapolates the M3 from the other M numbers that they are still publishing. And so what's called a shadow M3. But right now, the best estimates from realistic estimates are we're at 32% unemployment. If anybody thinks that unemployment is what the government tells us, all you have to do is just think about what's happening. millions of people are on lockdown. Think about all the people that you know personally. What percentage of your friends are not working and not making any money? It's definitely more than 15%. So anyway, JP Morgan is forecasting 20% unemployment and a 40% negative GDP in the second quarter. 40%. Here's the Treasury Secretary. He claims that the government shutdown was necessary for public safety. He said he would not be surprised if half the people didn't work, but he insisted that this is temporary. The reported numbers are probably going to get worse before they get better, but we'll have a better third quarter, we'll have a better fourth quarter, and next year is going to be a great year. Now, this is everything. We're getting this from the White House all the time. If anybody asks about the second quarter, they totally ignore it. And they say, we're going to have a great third quarter and even a better fourth quarter. They will not talk about the second quarter, except finally, one of the people in the economic advisors came out and said, we're probably going to have a negative 30%. Now, put that in perspective. When Obama was president, he said 2%'s all the growth that we're ever going to have. We're never going to have a big economy anymore. Well, Trump proved that wasn't true, and he had 3.5% to 4% growth until this happened. And now, smart economists are saying 38 to 40% negative GDP. So finally, the White House had to come out and admit that they think it's going to be probably 30%. I think that's just softening the blow because they know it's going to be closer to 40%. But the fact that they refuse to talk about the second quarter and just keep cheerleading and going to great third quarter, even better fourth quarter, you got to be suspicious of that. Look, I love the president, and he's doing his job. He's trying to keep people positive, but you also need to tell the truth because people need to know how to prepare. So with them saying we're going to have a great year next year, not so fast. The CEO of Bank of America says that analysts with his institution don't expect the economy to get back to where it was before the government shut down until late in 2021. Our estimates, our experts think this late next year when the economy gets back to the same size it was prior to this. And this was probably a month ago that he said this. I imagine if you went back and resurveyed those people, they're probably saying it's going to be into 2022. This is not going to be a V-shaped recovery. What the government has done is they put our economy into a medically induced coma. That's the way I like to describe it.
Well said.
Yeah, it's just like if you had some really bad illness and if you stayed awake, you'd probably die. They need to make your body relax, so they push you into a coma, and that's what's happened. And by the way, I want to say something here, folks. Because people sometimes when I talk about this stuff, they say, "Oh, you're not very patriotic. You're talking bad about the nation." No, I'm not. I'm just talking about the truth. I'm actually a very optimistic, glasses half full kind of guy. First of all, I'm a Christian, so I have a lot to be optimistic about. Second, I'm a Marine, and anybody who can get through Marine Corps boot camp that still has a smile on their face has to be an optimist. But I'm also a realist. A V-shaped recovery, well, economists are split on when the economy will start to rebound, but hardly anybody is sharing the bullish talk of the Trump White House. Trump vowed on Thursday that the economy would take off like a rocket once the spread of the virus is under control. Well, how does he know it's ever going to be under control? A lot of epidemiologists say this is going to be like the influenza, and it's going to be coming back every year, just like the flu does. He talks about we're going to have a vaccine for the virus by the end of the year. So we've already made arrangements to have 300 million doses made up, and I've got the military on alert to go out and administer them. I certainly hope we get a vaccine. I'm not depending on that. I've got my own vaccine. I think I've shared this on your show here before, but if you want to really be sure that you never get the virus, you just take Psalms 91 every morning, because it says that if you're under the protection of the Almighty, that no plague should come near your dwelling. So I'm a professor of biblical economics
I saw,
at a seminary. Yes?
no, I'm sorry. You go ahead. You finish.
I just say I'm a professor of biblical economics, and so this is stuff I study all the time.
You
We
mentioned
have-
the vaccine, and you mentioned that you brought up the military, and then you went on to say what you said about the inoculation. And I saw a picture this morning of a Catholic priest at minute doing a mass, and I guess there's a thing they do. I'm not of the Catholic faith, but anyway, the holy water.
Yeah.
Where they, do. He was using a little plastic water pistol. He wasn't trying to be funny, but he was trying to give the traditional blessing that's part of that, faith, and and they do the thing, and he was just using a little squirt gun, and I thought it was cute. I posted it because I wasn't trying to make fun of the guy at all. I don't want anybody to think that. I was saying, you know what, we do what we have to do given the set of circumstances we've been dealt, and so I applaud that guy for being creative.
Sure. I learned how to cut my own hair. I was getting
Oh, my
shaggy,
goodness.
and I
get a
can't go
picture?
to a hair place. So I took my beard trimmer, and I just experimented just a little at a time, because it's kind of hard to do the back of your head where you can't see.
Right.
But I was feeling with one hand and shearing with the other, and I gave myself a pretty good haircut. We figure out how to make things work. But people have asked me, well, aren't you afraid to go down and teach at Bible college? Aren't you afraid you're going to get the virus? I said, nope. Or aren't you afraid you're going to bring it home to your wife and daughter? No, not at all, because I believe God, but God can't lie. And he says here, it can't come near to my dwelling. So it can't get past my sidewalk, much less get in my house. So if you want to be sure that you're safe, that's the way to be sure. But here's the thing. I hope they do get a vaccine, but people forget it's been 4 decades now that the best scientists in the world have tried to get a vaccine for AIDS, and they've never even come close. And AIDS is a virus just like the flu is, just like the common cold is, just like this China virus is. It's a virus. And they haven't been able to get a flu vaccine. Okay, they have flu shots, but every year, anywhere up to 70,000 people die from the flu. So obviously, it's not a vaccine. It's not preventing the flu. It's either dampening the effects of it, or maybe it's helping some people keep their immune system stronger. But they have to redo the vaccine every year, or the flu shot. They don't call it a vaccine. They have to redo it every year because the virus is mutating. So, I mean, to base our view on what the economy is going to do on the fact that the president says, I believe we're going to have a virus by the end of the year. Well, just him believing in it is not going to make it happen. I hope and pray we do. Again, the Treasury Secretary predicting that the economy is going to roar back with a gigantic fourth quarter. We are going to kill this virus and return to a normal world. Well, I hope they're right, but how can you say that with any measure of confidence when for 40 years they've been trying to get a virus vaccine for the AIDS, which was a terrible scourge. So this on the left is what the White House is predicting, a V-shaped recovery. They say it's going to go up as fast as it went down, like flipping a switch. Okay, you can't flip the switch on an economy that, excuse me, if there's any Democrats listening, that the Democrats have deliberately made worse. Because if you look at all the states where they had the most draconian lockdowns, where they're arresting people for walking in the park, and at the same time they're letting murderers and rapists out of the jail because it's dangerous to be in close quarters in the jail. So they're arresting mothers and for the little toddlers for the crime of walking in the park or for going to the beach. And they're putting them in jail. And then at the same time, they're letting the criminals out because it's dangerous for the criminals to be in the jail. That's the kind of thing we're dealing with. Depending on where you live, it may seem excessive or it may seem pretty decent. I mean, here in Florida, our governor's a Christian. He did not want to do a lockdown at all, but he was forced into it by the Republicans. And so we had the least draconian measures of any state, but he did it smart. He went in and immediately ordered the hospitals, you will not transfer any patients that are COVID positive to a nursing home. On the other hand, Cuomo in New York, a Democrat in a Democrat state where they believe the government knows all and can figure everything out, he ordered the nursing homes who didn't want to take them to take the virus positive patients. So he signed the death warrant, not just of those patients, but also the other well patients in the nursing home. Over 5,000 people just in nursing homes have died, and their blood is on his hands because of his stupidity. So New York is supposed to child for how not to handle it. Florida is supposed to child for how it should be handled. And now we have 6 states that have opened up. And I just saw a great chart on television today. The states that have opened up and people have been let out of house arrest, including Florida, Georgia, Colorado, 3 others, they're reporting fewer cases and fewer deaths. And the states that are still locked down, like Michigan and the Northeast, their cases are continue to grow. Not as bad, but they're still growing because it's not healthy to keep people locked up in their homes, especially healthy people. I wrote an article, Conservative Truth, if anybody's interested. It's called "The Operation Was Successful, but the Patient Died." And that's actually something that happens in real life medicine. They do a delicate heart procedure, and it turns out beautifully, but the patient just wasn't strong enough to withstand the stress of surgery, so he dies. Well, that's what's happening now. The spread supposedly is stopped, by all this house arrest stuff, but we're killing the economy, and at the same time, we're killing thousands and thousands of people who are going to die as a result of the lockdown. I've seen some experts say that we're likely to see more people die because of the lockdown than die of the virus. Because, they used to tell us 4 to 6% are going to die in America. Millions are going to be dying of the virus. It's going to turn out to be less than 1/2 of 1%, which is about like the flu, as far as the number of diagnosed cases and the number that actually die. But we're seeing huge rises in the number of suicides because people that are already depressed, if you lock them up and you won't let them even go outside to take a walk, in some states, they're not allowed out of their doors. They're flying drones around, and the drones report them to the police. Then they get depressed, and some of them are committing suicide. A lot of alcoholics and drug addicts, they're getting worse because they have nothing to do except sit around and drink and take drugs. They've caught people, since we're having so much food delivery, they caught people delivering drugs in pizza boxes. Nice way to do it, get under the radar. And so as a result, we're having more domestic violence, not just cases, but also killings, where the father or one of the parents is abusing the children or even murdering their family. And some people are going to die because they can't eat. In New York City, there was a church that had some food they were giving away. They had 3,500 people lined up to get food. And of course, they ran out before the end of the line. Older people are dying, that live alone at home, because none of the neighbors will go and check on them. I mean, a lot of people do, but A lot of places they're not, and they're finding their bodies a week or two after they died because everybody's afraid to go and knock on the door. So, the cure could well be worse than the disease. Bottom line is that this is not going to be a U-shaped recovery. We've killed off about 100,000 businesses that will never reopen. The Republicans want to extend workman's comp, which was a smart thing to do, getting money in people's hands. But the Democrats wouldn't sign off unless we added $600 a week to it. Well, if you're one of the people that are drawing unemployment and you get an extra $600, you're happy about that. But if you look at the big picture, what's happening is now people are getting paid twice as much to not work as they used to get to work. So if the businesses they work for open back up, and millions of them won't ever open back up, they're not going to have employees because a lot of these people are going to keep on sucking on the unemployment thing because they make more money to stay home and watch Netflix. It's just insanity. So it's going to be a U-shaped recovery, and that bottom could be much, much wider than I show it here on the screen. I just didn't have enough screen space. It's going to be 2 years before we get back to where we were, if that. Restaurants, the National Restaurant Association predicted that 75 to 80% of restaurants are going to go under because the government's telling them, if we allow you to reopen, you can only seat like 1/4 of the people you used to. Well, restaurants operate under very small margins, and
it takes the average startup restaurant 6 years to reach break even, and something like 70% of them fail anyway.
I didn't know that, but I know that they don't make a lot of money because I worked in restaurants when I was a kid. It's if you don't fill the place up at least 2 nights a week,
and
the
turn your
restaurant goes
tables
under.
over 2 or 3 times.
Right,
And
exactly.
what that means, guys, is you have a full house, and then they finish eating and leave, and they bring somebody else. You need to have that table filled 2-3 times a night at capacity to have any chance of reaching that break-even point and then going on to become a profitable restaurant enterprise. So,
Yeah. And so now restaurants are spending money they can't afford to rip out all their booths and redo it with 1/4 as many booths.
I guess those menu
knowing-
prices are going to have to double, triple, which maybe people can't afford. So now maybe nobody goes to restaurants, even the ones that stay open, because they can't afford to.
They're going to have to lay off 3/4 of their employees because they've only got 1/4 as many tables. It's a domino effect, and that's just one industry. Okay, so
And it's being forced on us by people who have not missed a paycheck, who have a very nice pension tied to that government position, whether it's, the governor or a senator. They, when they say we the people, they're not, there's no we there when those words come out of a politician's mouth. It should be you the people, because they are the ruling class. Not only because they hold political office, but most of them financially are doing pretty doggone good.
and most of the governors are much more dictators now than they are governors. I mean, look at Michigan. That Whitmer woman. She put out her emergency executive orders, which governors have the right to do, but they're always subject to the legislature. And if you think about the history of executive orders, the reason why we ever allowed executive orders in this country by the president was because Congress only met a few months out of the year. And if you had to call them back for an emergency, it could take weeks for people to get there on horseback, especially from the West or stagecoach or whatever.
Mm-hmm.
And so the president had to have some latitude to act to defend the country if necessary. So that's the history of executive orders. I mean, there's a lot more to it than that.
And if I could throw in one little sidebar here, I didn't realize this till the other day. I was listening to a podcast. A fellow by the name of James Carrier, he invented the air conditioner.
Right.
Washington, D.C., if you've never been there in the summertime, is a very hot and humid place. So during those hot and humid summer months, Congress was basically, the whole government was literally shut down because of the heat. But when James Carrier invented the air conditioner, it was only then that our elected officials in Washington even tried to work the entire year. So I found that very interesting. In fact, the podcast went on to talk about movie theaters in towns across America. Once they got air conditioners installed in your theater, most people still did not have them in their homes at this point. But it didn't really matter what movie was playing on any given week, because all the signs around town said, come sit in our, frigid, ice cold air conditioning, and just, stare at whatever's on the screen. That's not the big deal anymore. It was just the fact that you could spend, 2 hours, without feeling like you're going to pass out. Anyway.
I live in Florida, where we, most of the country has 4 seasons. We have 2, hot and hotter.
Well, that's here in Phoenix, yeah. We have hotter and really hotter.
Oh, really? Even worse. Okay. But I remember as a kid doing that very thing, because when we were staying with our grandparents, because they had no air conditioning, they had a 100-year-old home, and I would go to the theater just to get cool.
My wife and I, when we first got together back in the early 80s, the particular job I had at the time, I worked from 6 a.m. To 12 noon. And so we had our afternoons free. And in Phoenix, they have these, they call them the dollar theater, where you could actually go in the afternoon and see a movie. It wasn't in the big main theaters anymore, but it hadn't yet gone to VHS or VCR, whatever. And so for a dollar, because when we first got together back in the early 80s, we didn't have 2 nickels to rub together. We didn't have any air conditioning. But boy, we'd come up with that $1 every day, $2, so that we could go and we'd watch. Sometimes and they didn't bug you if you hung around for the next movie. And nobody ever said anything. So for $2, we could spend like 4 hours in air-conditioned comfort before we walked back out into the blast furnace. So.
Okay.
And you know what, Dr. Tom? Those were good times. I remember those as really good times in my life. And that's when Top Gun came out, when we were doing that, or when it got to the Dollar Theater. And Back to the Future, Dirty Dancing. Yeah. Good movies, classics.
I remember Back to the Future. That's a great movie.
Great, iconic movie that is.
Okay, I'm not going to be able to finish this today. I didn't think I was going to. So I'm going to go to the end and give you the conclusion. Right. And next week, we'll pick up the other basics that go into the conclusions I've come to. But here's the thing. Dwayne defined a depression at the beginning. I've been a financial guy all my life, and I thought I understood what a depression was. Basically, it's like a recession, only of much greater magnitude. But it turns out that's not what it is at all. A depression is the same as a recession, same benchmarks to decide whether we're in a recession apply for a depression. It's just that depressions last longer.
And what takes us from a depression to a Great Depression?
Well, we've only ever had one depression.
I don't have a clever answer for that, so
Well, I imagine I know what your answer is. There's nothing great about a depression, right?
Well, no, I'm just saying I don't. I've heard of, we could have a depression, but of course we called the one depression we had here in America the Great Depression. So I just wondered if there was any kind of statistical thing that. Never mind. You get my point.
No. Well, if we do have a depression now, according to the numbers I'm about to show you, they'd have to call it the Greater Depression if we are indeed in a depression.
Well,
because a depression is actually 2 recessions in a row with no recovery in between.
Okay.
So that's the only official description. So think about this. There have been times we had mild recessions, and we didn't even know we were in one until we were out of it.
Okay.
Because it wasn't a strong one, and we had negative growth, but the people weren't feeling it. And you can't officially declare a period a recession until there's been 2 quarters in a row of negative growth.
Okay.
So by the time they say, yep, we were in a recession, we're already out of it.
Already
So-
picking back. It's like, when you apply the brakes in your car. Well, you don't stop on a dime if you're going very fast. You're going to go into a skid or something, and it's, you're going to be 100 yards down. Depending on how fast you're going, you'll be 100 yards down the road before your car comes to a complete stop. And then the same is true with acceleration.
So if you could be in a recession, which everyone agrees, there's not, Democrat, Republican, liberal, conservative, everybody agrees we are currently in the worst recession since the Great Depression. There's no argument about that. I mean, we're going to have between 38 and 40% negative growth this quarter that we're in right now. So that by itself would throw us in that category. There's never been anything, there's no precedent in modern times for this. The worst was in 1958 when we had 10% negative growth. So,
so when these
the White
numbers
House,
when these numbers do come out, don't be freaked out. I mean, of course you're going to be shocked, but we're telling you now to expect it. It's already baked into the cake.
well, I think that's why the White House is saying they think it's going to be 30%. They're sort of softening the blow. They don't want to wait till mid-July and then tell us, oh yeah, it turned out to be 40%. So anyway, here's the deal. We could be at the beginning of a depression and not know it. We won't know it for sure statistically until at least a year, because it would take 2 recessions back to back. But we have some of the top people in the country saying that there's no way there can be a recovery this year, and the best we can hope for is late next year. So I'm going to skip to the end, and they're calling it a second quarter bloodbath. I don't think most people have any idea of how much trouble the economy's in. They have killed millions of businesses. There's millions of businesses that will not open again. There's millions of people that are unemployed that will never reopen. Okay, here's a quick one. In the Great Depression, the jobless rate was 24.9%, and they got down to negative 26.7% GDP. What they're calling here the viral recession, it's just going to be negative 30.2% projected, right?
Okay.
During the Great Recession of 2008, jobless rate of 10% and GDP down 5.1%. So that was pretty mild. And I agree with everything in this chart except this number, because that's the government number. We're well above 30%. So all the main indicators of a depression are here, only bigger. And I want to show this to you. Let me just stop on this one here. How do they consider people unemployed? Well, they ignore the 600,000 discouraged workers, people that have tried and tried and tried for years and can't get a job. They ignore the 22 million underemployed citizens who had good paying jobs and now they're working at Walmart or McDonald's or whatever, and they're having to use their savings to live.
Right.
They're not really employed. They may only be working 15 hours a week. Anybody who hasn't actively looked for work in the last 4 weeks, well, I mean, if you've tried for 2 years, what about somebody who's younger than 16? They do not consider them unemployed, even though they're unemployed, even though they've had a job in the past. Mm-hmm. Retirees and seniors who want to go to work, but they face age discrimination. Anybody that earns commissions, like a real estate agent, homemakers, anybody not in the labor force.
Well, and that would also include anyone that owns a small business.
Yeah, because unless you're getting a salary from your business. But this really blew me away. Anybody who's not in the labor force. Now, this is the government definition for being in the labor force from the U.S. Bureau of Labor Statistics. People who are neither employed or unemployed are not in the labor force. Well, what kind of government doublespeak is that?
Pretty bad.
You're either employed or you're not employed. What's in between?
Yeah.
What is it that's unclear about that?
Right.
But if you're not employed or you're not unemployed, then you're not considered to be in the labor force. So they really only count about half the people who actually are unemployed. So let me go on. Oh, major chains going bankrupt. Neiman Marcus, JCPenney, Pier 1, True Religion, Gold's Gyms. They're all gone. They're not coming back. 43% of small businesses.
I actually know a guy. He's becoming a CFRN partner. His family has some real estate holdings, and one of the real estate holdings is where one of the big Gold's Gyms is located, and they haven't paid him his rent in, I think when he and I spoke last, they had missed one rent payment so far, but that was like 50 grand.
Wow.
Yeah, he's hurting.
Yeah.
He's hurting. And
So-
his other commercial clients are, defaulting as well.
We all hear, that small businesses produce most of the jobs. I found the exact number, 59% of the jobs in the U.S. And 43% of these small businesses are in danger of becoming extinct. 75% of restaurants could fail. Other estimates are 80%. This is from the National Restaurant Association. And even though the lockdown's over in some states, they're slow to come back.
Have you eaten any takeaway food or drive-through food since this whole thing happened?
I have.
Have you? I finally broke down last week. It was the first time. I got a thing about burgers, and Burger King, God bless their soul, they have a coupon that keeps popping up on my phone. You get 2 Whopper Juniors, 2 drinks, and 2 fries for $5. So,
That's
I
a
went
pretty
and
good deal.
I went and spent my little coupon. Yeah, I did. It was good too. I'm telling you. I know it's not good for me, but
You ought to just get the vegetarian one. It actually tastes like a regular hamburger.
no, I tried one, and I think if you had slipped it in on me and not told me it was the vegetarian burger, I would have probably been okay with it. But I knew it was because I ordered it specifically because I wanted to taste it. It didn't taste right to me, and it could have been all in my head.
Probably. Okay.
Now, you've talked a lot about depression, and that's very similar to the word depressing, or the other kind of depression, that it doesn't have to do with money. I heard a thing yesterday. The U.S. or the Suicide Prevention Hotline, they provide a course that teaches people, how to counsel other people when they're feeling suicidal. And since this pandemic struck, there's been some phenomenal number of people that have signed up to take that course, as we've never seen before. Now, I think some of those people do want to be able to help other people. Maybe they're pastors, maybe whatever. But I think a lot of those people probably that took that course were feeling a little hinky themselves and just thought maybe they should go and try to do something positive about their situation before they end up doing something negative that you cannot take back.
Yeah, the hotlines are overwhelmed. Can you imagine calling a suicide hotline and get a busy signal?
Yeah, no doubt it probably happens. I don't know.
Okay. I want to wrap this up. And what I can do is, as you notice, I've been scrolling forward. I want to just go to a summary. And next week we can go back in and look at what brought us to this place. But here's the parallels between the Great Depression and what we'll call the Great Recession right now. And then you make up your own mind about whether you think that we could see this develop into a depression, or maybe is already a depression. When I started studying this, I said, no, there's no way we are. But now that I understand better about what a depression is, it's quite possible that we're in a depression. Here's the trigger. The trigger for the Great Depression was a stock market crash of 29%. Pretty awful. Mm-hmm. It got much worse than that later on, but the initial crash is what triggered the whole economic down cycle.
Right.
Today's Great Recession, we've already experienced a crash of 38.4%, so much greater in magnitude.
The difference is today we have the Fed in place and the Treasury and the plunge protection team. We have all these things at work to try to prop up the market. Whether it ultimately works or not, yeah, who's to say, and at what cost? But those are tools that were not available back during the Great Depression.
I just wonder why they didn't use them when the market was dropping 38% just a few weeks ago.
Well, I got a
why
feeling,
didn't the circuit breakers kick in?
I got a feeling they did, but a lot of people were scared, and a lot of people wanted to go to cash.
Yeah, well, everybody knows that stocks go down 2 to 3 times faster than they go up. That's just a given.
It's financial gravity.
And people, I get calls every day. People ask me, when's it going to go back to 30? I said, it's going to go to 15. A long time before it's going to go to 30. We were down 18%. Then we had this dead cat bounce, and then it dropped back off again. And it's trying to claw its way back up, but it's not going to 30,000, folks. I mean, once people realize, yeah, there's nothing to propel the market. You must have something to make it want to go up. And okay, unemployment. I mentioned this: 25% unemployment during the Great Depression. Just so far, we're at over 30% today. And finally, GDP loss during the Great Depression, negative 30%. We're looking at 38 to 40%. So just these numbers show that, you know, the three key characteristics, if you will, of the Great Depression already exist today, but at a greater magnitude. Mm-hmm. You know, roughly 30 to 50% higher in every case. Mm-hmm. So I don't like to talk about problems without offering solutions. And of course, you all know I'm a big believer in gold as a way to protect yourself. So I think eventually our dollar's going to crash, and the government's going to be forced by the people to go back to real money, which is gold-backed money. We never had these kind of problems until we went off the gold standard. So when that happens, right now we got enough gold to back 4% of all the dollars, trillions and trillions of dollars that have been printed. Well, if you do the math on that, that extrapolates to a gold price of $42,500 per ounce. So people have just regular bullion following a crash and following the government going back on the gold standard. They would have to revalue the dollar, you know, so that it would cover all the gold would cover all the money we printed. And then we'd be back on
at a pretty extreme price.
$42,500 by my math. So it's going to have to happen. The only way we can get sound money again is if there's a crash. I don't want to crash, but it's going to happen. There's, you know, every nation in the world, except for little banana republics that nobody will lend them money, has experienced hyperinflation. The reason the banana republics don't get hit, I think they were the only ones that weren't hurt in the Great Depression, that weren't hurt in 2008, because nobody will lend them money. It's debt that causes the problem. And I haven't mentioned this today, but we were sitting at 25.5% debt as the end of last year. The Social Security Trust Fund and the Medicare Trust Fund, before all this started, both announced that they were going to run out of money in 6 years. And now, if they had to do the same report based on today's numbers, it'd probably be half of that, probably 3 years. So, it's going to happen. We're going to have to go back to sound money, real money, at some point. And when it does, if you have bullion, you'll be very wealthy. And if you have investment-grade coins, you'll be stupid wealthy. I mean, I can have so much money, I won't know how to spend it. And I'm going to give 90% away. I've already got my plans worked out for that. Because, I'm not the kind of guy I need to drive a Lamborghini or have a house over in the ocean. I can afford a house in the ocean now. I don't want to live there. I like living out in the country. So if you want to find out how you can protect your family, you go to CFRNgold.com, CFRNgold.com, or you can call me directly at 561-753-5998, 561-753-5998. Make sure you tell the person who picks up the phone that you heard about Golden Heart, our company, on Dwayne's show or on CFRN. They know what that's all about. Right now, there are thousands of gold dealers all across the country who have no gold, no silver. There's huge demand. It's gone from 2% of Americans owning gold at the end of last year to 12% right now. So people have gotten 600% smarter, 600% more demand. And most of those are people that before they were buying paper gold, like the GLD or whatever. Now they realize that the only safety is having the yellow stuff in your own hand. If you can't hold it, you don't own it. So if you want to protect your family or your business or your church or your ministry, then you put it on the gold standard. And all you have to do that is buy gold, and particularly buy the right kind of gold. We're one of the few dealers in the country that still have gold. I'm hoping that I'll have enough to last the next 2, possibly 3 weeks, because we've had huge demand. We're shipping out every day. And we're not like the internet guys that they'll take your order and then they'll say, well, we'll try to get it to you in a month or 3 weeks or 4 months. One guy was actually told, wire us $50,000 and we'll ship your gold in 4 months. Well, how could they do that? I mean, Bank of America, I think about this last week, but it's like such a shock. They're recommending buying gold. Banks have never recommended buying gold because they don't make money on it. But they're not only recommending to buy, but they're saying it's going to $3,000. So if somebody buys gold now at $1,750 and 4 months from now it's at $3,000, they're not going to be able to fill those orders, and they're not going to have the money to get back to you. So be very, very careful. There's been 5 big bullion companies on the internet that have gone bankrupt in the last 10 years. The latest one was Bullion Direct, which I actually had ordered from it at times, but I've learned my lesson on that. And now they say they're bankrupt, that they just ran out of money. But strangely, the president is facing 50 years in prison. So that sounds a whole lot more like fraud than mismanagement to me.
That doesn't
So
sound good. No.
give us a call. We can still help you.
All right. Thank you, Dr. Tom.
You're certainly welcome. You have a great day. God bless you and everyone on the line.
We appreciate you very much. Thanks so much. Talk to you soon.
Thank you, sir. Bye.
Okay. Let's see if we can get the charts back over here to this side of town. This side of the country. All right. There we go. All right. We'll take another peek at the charts. Okay. crude has pulled back up to the trigger, but see, this is a time when you do not want to take the long trigger. Why? Well, because price is pulling up to the BBC, which when we approach from below, we expect to be good resistance. We've also got red and falling here. We're also below the 50-yard line. So if this poked its head above, I'd resist. Now, over here was a different story. You were above the BBC. That supports a long position. Once, twice, 3 times. This is a different story. Okay? Here, we look for this to give us a down leg. First obstacle here, next obstacle here, next obstacle here, which then leads us to the short side trigger. Now, does that mean you can't trade short between here and there? No. Keep your eye on the Logic 247 alerts, and I'll show you how we do that. S&P, trying to rally, right? But let me show you what that looks like. That area I drew in as resistance at the beginning of the show, bang, there we are. Okay? Until price can get on the other side of the BBC and hold on a pullback. We're printing a green candle. I'm not placing any orders right now. But in 16 minutes, we're going to get a new 30-minute candle. And if that baby starts printing red, well, we've already got an alert in place. There'll probably be some logic alerts to accompany that. Dow, same situation. Russell bucking the trend. That's our man in the street, okay? NQ led on the way down. Russell trying to lead on the way up. Anytime you've got one of the 4 major indices bucking the trend, you got to wonder, is that the leader or the laggard? Okay? Watch your charts. Your charts always have the answer. Where's the NQ? Pulling up to resistance. Preparing to take another leg to the downside. Unless the Russell knows something the rest of us don't know. Now, coming up at 2:30 p.m. Eastern, Jerome Powell will be speaking. I don't think it's a big issue. I think it's some kind, it's some kind of a meeting where one of the other Fed folks was speaking, and then he's going to speak, and then another Fed person will speak after him. Something about the economy's response to the COVID. I don't know that there'll be market-moving stuff happening during his time that he's speaking. But be careful, because you never know. If he's fielding questions from the audience, be careful. If he's delivering a prepared speech, I'm sure he's going to tread very lightly and try to be as encouraging as he possibly can. All right, so I know we're looking to be short, potentially crude. The Dow is sitting above the BBC. If we can close above red and falling and above this high, then I'm happy to be in a long position back up to the highest weekly trading zone. Russell leading to the upside. Gold still looking for more downside. Now, the slingshot is approaching the 50-yard line. If it turns here and heads back down on the next candle or two, you can write this thing off. We already had a beautiful day in gold, but there may be more to come. Alrighty. Now, let me show you Logic 247. I already gave you the recap, which I'll show you again. So far this week, week 94, 58 total alerts issued as of 12:30 today, 7 never triggered, 4 waiting, 47 actionable alerts, 6 stopped out. That's 13% of actionable alerts stopped out. Over the last 93 weeks, we've averaged 20% of actionable alerts being stopped out. Okay? Now, the Logic 247 alerts. Let me just show you what those look like in case you've never seen them. If you're on the trial, of course, you have complete access to them. You don't see them after the fact. You see them as they happen, as they come out live in real time. Plus, you can scroll up in weeks past, see what happened. We're very transparent with everything that we do. Last week, week 93, we had a total of 76 alerts, 7 never triggered, 69 actionable. Last week, 4% got stopped out. That's an abnormally low number. Again, we average about 20%. Coming out of the gate Sunday night, 6 p.m. Eastern, that's when we start. That's when the Globex market's open. We keep the pedal to the metal with logic around the clock up until Friday afternoon at 5 p.m. Eastern. Thumbs up means price found the target. S&P, Crude, Dow. B is buy, S is sell, T is target. WTZ is weekly trading zone. On every alert, the final trade to target on a short is the zone below, on a long, the zone above. So now we're rolling into Monday. Here's a stop out on the S&P. That's what the red X means. There's a stop out on Crude. Z's, that's one that never triggered, and we finally moved on. Another stop out on the S&P. There's a series of no triggers. There's the Dow, S&P, Crude, Gold, NQ. Stop out on the Russell. Stop out on the S&P. Get on the Russell. As of last night, out of 3,790 alerts, based on that 20% number, 758 were stopped out. Past performance is no guarantee of future results. And then this began today. Had you been in the live training room this morning, had you been in the alert channel this morning, these thumbs ups, could be you. But remember, if you come on board with us, we want you trading in SIM until you become consistently profitable. So if you're looking for some fast money, get rich quick overnight kind of thing, we're not for you, unfortunately. Because while we do give out, as I just showed you, valuable trade alerts around the clock, that's not our goal. Yeah, our goal is to provide you with high probability, low risk trade setups. But our ultimate goal is to teach you how to find those opportunities yourself. You have full use of our indicators, full use of the alerts. You get 2 hours of live training every day, Monday through Friday. If you don't show up one day, that's okay. We still have class every day, Monday through Friday, 9:30 a.m. to 11:30 a.m. Eastern. And as a member, you have access to unlimited one-on-one mentoring. Futures Magazine in 2006 published an article, 9 out of 10 new traders fail. But they didn't say why. So I became a man on a mission. I wanted to know why. Well, I pieced it together. 9 out of 10 new traders don't have a teacher. Now, buying some indicators or a book off the internet and maybe some videos, that's not the same thing as having a teacher. Sitting in a room where a grumpy guru, barks out stuff and then tells you you're stupid because you didn't get it, that's not a teacher. If you've ever been at a one-on-one mentoring session with myself or Michael, you know what a teacher is. Okay? And then, God bless America, you get to decide what kind of experience you want. The ball is in your court. It's entirely up to you. If we can help you, we'd love to. If what we do is not right for you, we certainly respect that. Brad says, are logic alerts good as many times as they present themselves in that day of issue or just the first time? They're good every time, Brad. Just like the concierge. Absolutely. Brad also asked, Dwayne, is the only approach for logic alerts to enter on the first touch? Absolutely not. No. I will teach you how to use smaller time frames. I will teach you how to navigate those entries every time price hits a trigger. All you got to do is book a mentoring session with me, and I'll be happy to teach you the same thing that I teach everyone else. All of our members, all of our partners are taught the exact same thing. Okay? Okay. Last 3 days we've been talking about God and your money. We'll talk about it again today. Ecclesiastes 10:19. A feast is made for laughter. Wine makes life merry. And money is the answer for everything. That's from Ecclesiastes. The Bible teaches that God wants you to have enough money to do a few different things. Number one, provide for the needs of your family and help them to succeed. 1 Timothy 5:8. But if anyone does not provide for his own, and especially for those of his household, he has denied the faith and is worse than an unbeliever. Number two, Proverbs 3:9. We are supposed to use money to finance building God's kingdom. Proverbs 3:9 says, honor the Lord from your wealth and from the first fruits of your labor, or the first of all you produce. Number three, pay your taxes and your obligations. In answer to the question, is it right to pay taxes to Caesar or not? Jesus said in Matthew 22, give unto Caesar what belongs to Caesar, and give unto God what belongs to God. Number four, sending his word to the four corners of the world. CFRN has been broadcasting free of charge since April of 2005, the gospel of Jesus Christ. We pause 2 hours a day to do this live broadcast, but the other 22 hours a day, the gospel is being preached free of charge to the four corners of the world. How then shall they call on him in whom they have not believed? And how shall they believe in him of whom they have not heard? And how shall they hear without a preacher? And how shall they preach unless they are sent? CFRN, 22 hours a day, stands on Romans 10:14. And number five, help the poor and the needy. Psalm 112. Blessed is the man who fears the Lord, who delights greatly in his commandments. Wealth and riches will be in his house. He has dispersed abroad, he has given to the poor. His righteousness endures forever. When your reason for wanting money is to fulfill God's will and bless others, God, in his word, says that he will honor your efforts. And that's our good word for the day. If you haven't begun your journey with us yet, go to eminitrainingschool.com. That's where you start the free trial. Now you get 2 free trials per lifetime, 1 every 6 months. If you've never taken a trial, just get on over, sign up. If you've already burned up a trial, then wait your time and come take a second trial. Okay? I'm always available to talk to you if you've got questions, if you want to know more about what we do and how we do it and that stuff. Just get a hold of Valerie. Phone number's on the screen, 949-42-EMINI, or send an email to support@cfrn.net. I'm happy to talk with you. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.